Yesterday we had a bit of consolidation, so most Chinese and other growth and tech stocks have been down, but overnight Hong Kong has already pushed some gains and is in the green. And this was because, for example, Alibaba announced that they were going to do a bigger buyback of shares. Their CFO said that the company is nowhere valued where it should be. And if we are just looking at those free cash flow metrics, Amazon versus Alibaba, and the market cap aligned to it, we can certainly make the case that Alibaba, while having very healthy cash flows here, is very undervalued. And this is of course mostly because of this regulatory and geopolitical overhang. But this is where we have some interesting news today that could send Chinese stocks higher. Exclusive by Reuters, Chinese regulators ask some US listed firms to prepare for audit disclosures. So it seems like the Chinese regulators, the CSRC, is getting the work done now after Liu He has pushed to actually reach a successful deal between China and the US when it comes to those delisting fears and the accounting oversight. And of course, China is top down, so they do what their boss is telling them to do, the number 2 in the country. And so the regulators have asked some of the country's US listed firms, including Alibaba, Baidu, and JD.com, to prepare more audit disclosures as Beijing steps efforts to ensure domestic companies remain listed in New York. These companies were asked to prepare audit documents for the 2021 financial year, keeping in mind US regulators' request for more disclosure, and it's particularly for Chinese firms that do not gather sensitive data. So while this doesn't mean that there will be an agreement between the PCAOB, SEC and the Chinese counterparts, the CSRC, it is an indicator and it sends a signal that from the Chinese side they are willing to open the books for the PCAOB, the accounting oversight. And well, we don't know yet whether or not this is just a small trial here, a prototype, and we don't know the scope of it. So just a couple of company names have leaked here. And so we need to see how they are going to progress forward with this. But where I think this could have the biggest implication, I mean, of course, over the whole Chinese tech sector in general, this would alleviate some of the pain around this delisting fear and maybe even in the area of geopolitics. However, what I think really would benefit from that are the Chinese small caps, like companies like Xunlei, XNet or Sap Health. These are by now micro caps that are trading even below their cash position in many cases, or at least enterprise value. And why is that? Because these companies are basically valued now for going private or an absolute delisting and maybe even not continuing to issuing shares. And that's because these smaller companies, in the case of a non-deal between the US and China, would have it much more difficult to actually also list in Hong Kong. They can't do it easily like a Neo or an Alibaba and so on. And while these companies, like the bigger names, can certainly also survive if they're not listed in the US, the smaller names should actually be really benefiting in the end if we are seeing positive progress. And by the way, if you're interested into my takes about Sap Health as well as Xunlei, the earnings, and how they are progressing on a fundamental level, feel free to join my Patreon, where I've just done a half-an-hour walk through the financials and updated my Excel sheet as well. Lastly, if the US and China don't get to an agreement, there are actually also other ways. For example, Chinese firms are attracted by Swiss listings, and there are plans by Chinese companies to issue global depository receipts, GDRs, that are traded on the Swiss exchange, but also at Deutsche Börse, at Germany's exchange, as well as the London Stock Exchange. So we see increasingly those stock connects that actually would be also an addition or even an alternative, maybe even for such smaller companies like Xunlei and Sap Health and others that are trading at very low market caps and that have right now difficulties to stay listed in the US. So let's see how these first steps are actually perceived by the markets today. I hope you find this insightful. Thank you guys for watching. Please like, comment and share, and feel free to join our Patreon to discuss this type of content. Thank you guys for watching, and see you in the next one.